2000 to 2010, America saw 50,000 factories close and 6 million manufacturing jobs disappear. China, Japan, the EU, Canada, and even Mexico ran up hundreds of billions or trillions of dollars in trade surpluses with the United States. Is this because their workers are more capable and efficient? No. Worker for worker, Americans are the best. Why then are we losing? Because China, Japan, and Germany are trade predators, not trade partners. They look on trade the way Vince Lombardi looked on football. Winning isn't everything. Winning is the only thing. Germany, Japan, and China recite the Catechism of Free Trade and practice economic nationalism. Their tax and trade policies, from currency manipulation to value-added taxes on imports and rebates for exports, to subsidies for national champions, to non-tariff barriers on U.S. goods, discriminate in favor of their products in their market and in our market. We talk about a level playing field, but they landscape the field to win. The success of economic nationalism may be seen in the shifting balance of power. China is the world's rising power, and America is everywhere seen as the declining power. Yet while the Chinese and German economies are but one-third the size of ours, both export more than we do. How? The game is rigged, and we need to walk away from the table. For if we do not cure ourselves of this obsession with free trade, the industrial evisceration of the United States will continue until we make nothing the world wants but Hollywood movies. Ralph Gomery, a former IBM Senior Vice President for Science and Technology, relates what the naivete of the free traders and the greed of our corporate elite are doing to our country. Quote, "We have too many people today who see in the destruction of our key industries by well-organized and highly subsidized actions from abroad nothing more than the effects of free trade and the operations of a perfectly free market. This is a delusion and a dangerous one. We also have an elite industrial leadership that too often sees itself with no other duty than maximizing the price of their company's stock, even if that means offshoring the capabilities and know-how for advanced production to other nations that have no free markets themselves." End quote. The heart of the problem, writes Gomery, is, quote, "lack of leadership from our own government, which must realize that the fundamental goals of the country and of our companies have diverged. What's good for General Motors is not good for America if General Motors is shifting plants and production to Asia to build and export cars to America. America has been running the largest trade deficits in history for decades, but a U-turn could be effected by adopting tax and trade policies that set as national goals the reindustrialization of America, the recapture of that huge slice of the U.S. market lost to foreign producers, and the substitution of U.S.-made goods for foreign goods until America is a self-sufficient nation again, as she was from Lincoln's time to JFK's. To reduce our dependence on goods made abroad and grow our dependence on goods made in the United States, we should impose tariffs on all imports and use every dollar of tariff revenue to reduce taxes on U.S. producers. If the United States imports $2.5 trillion and manufactures food and fibers and imposes a 25% tariff, that would yield close to $600 billion to virtually eliminate corporate taxation in this country. What would such a tariff accomplish? First, a reduction of imports as their prices would rise, and a concomitant increase in orders to U.S. factories and farms. Second, as the profits of U.S. factories and farms surged, Americans would be hired to meet the new demand. The income and payroll taxes of those new workers would replace sinking tariff revenue from falling imports. Third, with corporate taxes cut to nothing, U.S. companies could cut prices on goods produced here, making U.S. goods more competitive both here and abroad. As foreign companies realized that the U.S. corporate tax rate was the lowest in the free world, they would relocate here. Fourth, as the price of imports rose 10, 20, or 30%, Foreign companies would realize that to hold their share of the world's largest market, the $15 trillion U.S. market, they would have to shift production here to compete with U.S. companies. Companies like Mercedes, BMW, Toyota, and Honda would not only assemble cars here, but would build plants here to make their batteries, tires, motors, and frames. The tide of capital investment rolling into China would shift and begin surging back to the USA. That would be our message to the world. Every company and all products are welcome here, but if you want to sell here, you produce here, or you pay a stiff cover charge to get in. Would China, Europe, and Japan threaten retaliation? Perhaps. But we should tell Beijing, Brussels, and Tokyo we will accept a combined VAT tariff on U.S. products entering their markets equal to our tariff on their goods, but no more. Equality and reciprocity, not globalization and free trade, should dictate the terms of trade. And would China, Japan, or Europe risk a trade war with the United States when all three run huge annual trade surpluses with the United States? Every year, Beijing exports to us 6 or 7 times the dollar volume of goods we export to China. If the United States lost 100% of the world's markets we now have, but recaptured 100% of our own, we would be $500 billion in the black, for that is the size of our trade deficit with the world. We have nothing to lose but our trade deficits. We have a self-reliant republic to regain. Economists would cry protectionism. We can't turn our backs on the world. But no one is turning his back on the world. The goal is not to freeze out foreign goods, but force foreign goods to carry the same share of the U.S. tax load as goods made in the USA. A tariff so high as to lock out foreign goods produces no revenue. What is proposed here is not a protective tariff to keep out foreign goods, but a revenue tariff, with the rate set at a level to maximize revenue for the Treasury and maximize tax cuts for U.S. producers. What is urged here is that we do to the VAT nations what they do to us. Pleas, protests, and threats to take Beijing to the WTO have not persuaded the Chinese to let their currency rise. Let us accept that reality, cease whining, stop hectoring, and act. We need to bring manufacturing back and relearn truths taught centuries ago by Hamilton. Manufacturing is the muscle of a nation, vital to its defense and the securing of sovereignty. It is the magnet for research and development. It is organic. It grows. Around the factory form other businesses. Towns develop. Manufacturing workers average twice the wage of service workers. We need to change the way we think. Production must come before consumption. We cannot consume if we do not produce. We must start making things again. We must reduce our dependence on foreign nations for our national necessities and the loans to pay for them. If it can be made here, it should be made here. We need to start relying on one another and stop listening to the, quote, sophisters, economists, and calculators who gutted the greatest manufacturing nation the world had ever seen. Our problem lies not in ourselves, but in policies imposed by politicians in the hire of corporatists whose loyalty rises no higher than the bottom line on a balance sheet.